Wow. So I just saw that the Sensex crashed like 800 points and the Nifty went below 22,850. I mean, that's pretty huge, right?
Yeah, it's definitely a significant drop. It's due to weak global cues, some disappointing earnings, and even uncertainty about US trade policies.
Hmm. Okay, so a lot of things are playing into it. The India VIX is up 10%, which I guess means volatility is high.
Exactly. The India VIX is a measure of market volatility. So a 10% jump does indicate that investors are pretty nervous right now. And the Nifty even dipped below 22,800 for the first time since June last year.
June, that's a while ago. So is it just the big stocks that are affected?
Well, not really. The broader market, including mid cap and small cap indexes, also took a huge hit, plunging as much as 4%. And apparently, over 9 lakh crore of investor wealth was eroded.
That's like a massive amount of money just gone. So, which sectors are really taking a beating here?
Well, it seems like all the sectoral indices are in the red. Energy, IT, metal, media, and pharma sectors were the worst hit, tumbling between 2 to 4%.
Oh man, everything seems to be going down. So, what's next? Are there any big events that could change things?
Actually, yes, everyone's eyes are on the union budget on February 1st and the US Federal Reserve's rate decision on January 29th. Those events will likely set the tone for the markets this week.
So it's kind of like a waiting game to see what happens. InCred Equities also lowered its target for the Nifty 50 index.
Yes, they reduced it by 8% from 25,120 to 23,260. That's a pretty significant revision, which shows they're not too optimistic.
Right, not at all. And they even have a bearish scenario where the Nifty could go all the way down to 21,016. That's a huge drop.
Yeah, that bearish scenario takes into account factors like a drop in GDP growth, political instability, high oil prices, inflation, and problems with exports. They've also raised the probability of that happening to 40%, up from 35%.
So things could actually get worse potentially. There's also something about a Chinese AI model affecting the market.
Yes. The launch of a free open source AI model by DeepSeek, which is seen as a rival to OpenAI's ChatGPT, has actually negatively impacted NASDAQ futures. It's like any bit of bad news can affect valuations, especially when things are already expensive.
Okay, so even tech news from overseas is messing with our markets. I guess investors are very sensitive to everything right now.
Exactly. And, the ongoing earnings season isn't helping either. Looks like a lot of companies have missed their earnings expectations, further dampening investor confidence.
Right. That always makes people nervous. Then, there's this uncertainty about US India relations.
Yeah, it's like Trump's unpredictability is adding more anxiety. Even though some announcements have been made, people are just worried about what might happen next.
Makes sense. It's like adding fuel to the fire, I guess. Credit Access Grameen's shares sank 6% after they further slashed their guidance.
Yes, and that company's stock has lost about half its value from its peak. It is a good example of how investor confidence can really plummet after a series of negative announcements.
Wow, 50% is huge. And Lotus Labs also took a big hit, right? Like 12%?
Yes, that was because of concerns that Trump's withdrawal from the WHO and halting of emergency funding might hurt their antiretroviral business. It's a big part of their revenue, almost half actually.
Okay, I see. So global health policy can really affect individual companies. And CDSL shares tumbled too by 9%.
Exactly. Following a weak quarterly performance, which just added to the overall market woes. So many things seem to be pointing towards a negative trend in the market. It's a bit concerning.
Yeah. So is there anything at all positive happening? It seems like everything is down.
Exceptionally, there are a few exceptions. ICICI Bank shares rose nearly 2% because of higher quarterly profits, supported by, robust loan growth. A few others like Britannia, SBI, and HUL also saw some gains, but very small ones in comparison to the losses.
So just a few rays of sunshine in all that gloom. There's also something about foreign investors pulling money out, right?
Yeah, foreign portfolio investors have been net sellers, pulling out a huge sum of about 69,080 crore rupees from Indian equities in January alone, which definitely impacts the markets, making it volatile.
69,080 crore. That's like a massive vote of no confidence, isn't it? I guess this all really shows how interconnected the market is with global events, earnings, and even politics all playing a role, doesn't it?
Totally. It's a complex web where any slight shift in one area can cause a ripple effect across the entire market. It's like a domino effect, one thing leads to another.
So, there are some interesting points about support levels.
Yes, both the near term and medium term trends are negative for the market, and short term support levels like 23,000 are unlikely to hold in this kind of environment.
So, even if the market bounces back a little, it might not last very long. It's like these are just temporary relief rallies before the next drop.
Exactly. There's also a long term support level for the Nifty at 21,800. So the market could still fall further in the coming days.
Okay, so it's a pretty gloomy picture all around right now. This is definitely something for listeners to pay attention to if they're invested.
Definitely. And, it's always a good idea to be informed and aware of these fluctuations. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
That's right. It's also useful to see how various factors affect the market. Now, before we dive deeper, let's just remind our listeners to please like, share, and subscribe to our YouTube channel to keep up to date with all things related to the market.
Okay, that's a great shout out. And yeah, it's a good reminder for everyone to stay informed. And, these market drops can be scary, but it's important to remember that sometimes the market also corrects itself.
So true. These swings are like part of the game. So, what do you think about like what all this means for the average investor right now?
Well, it's certainly a time for caution. It might be a good idea to review your portfolio, assess your risk tolerance, and maybe, consider diversifying your holdings. It's like not keeping all your eggs in one basket.
Yeah, and maybe this is a good opportunity to learn more about how the market works. It's a bit like going through a tough workout. You learn more about your body.
Absolutely. And staying informed about market events, both national and global, can definitely help in making better investment decisions. Having that broader view.
Definitely, it's, not just looking at the daily numbers, but also understanding all these factors that can impact the market. So, overall, it's a bit of a turbulent time in the market, but staying informed and cautious might be the best approach for now.
That's spot on. It's all about being prepared and, making smart choices based on what's happening around us. It will be interesting to see how things play out with the upcoming events, especially the budget and the Fed meeting.
Totally. It seems like we're in for a bit of a roller coaster ride this week. Let's see what happens, right?
Exactly. Well, we'll be back with more updates as things unfold. So stay tuned and we'll keep you in the loop about all things market related.